this is Don Kaufman, and you are watching the TheoTrade evening video, February 24th, 2021, minutes after the cash close here on this Wednesday afternoon. Everybody's been asking the question today, are the dip buyers back? Or is there more sell-side activity to come? We're going to try to answer that in this evening's video. I got to tell you, some pretty fierce sell-side activity even earlier today. Let's start this evening's video with a detailed look at the S&P futures and to get really specific with you, some levels inside of the S&Ps. And when I talk levels, people, you better listen because we're going to give you some very, very direct levels. One of the first things that's kind of a standout inside of the S&Ps, all right, you got some really big boy ranges. I mean, let's just point out that the S&Ps, you're like, whatever. Listen, the S&Ps from high to low in the trading session here, 75 handles, right? That's 75 points, right? So 75-point range from high to low, low to high, which is, again, it's significant. I mean, take a look at the Russell, okay? Russell's it's just downright wild right now, again, on a percentage basis from the low to the high. Now, one of the things that's also kind of stand out and you should kind of be aware of when I start talking about, big ranges, and I wanted to start with that, you've now actually passed through several days with some fairly substantial ranges. In fact, okay, I would look for on at least Thursday, coming into tomorrow's trading session, a substantially contracted range. We just haven't had much of an inside trading session, and that's exactly why I'm going to talk about some very, detailed levels here momentarily. So in today's trading session, okay, and I'll talk more about, ranges in a moment, but in today's trading session, there are actually two very pivotal levels that were hit and should kind of resonate with you. One of the levels is, and it's something I've actually talked about quite consistently, is right down here. It's at about 38.80. Okay, from 38.80, we actually, sit there for a period of time. That was where trade kind of persisted throughout the course of most of the evening here. The break under 38.80 gets a little bit violent. We rally back. If we do actually rally back to 38.80, we took off, okay, like a rocket. And let's get very specific here, 39.11. 39.11 side of the S&Ps is holding a huge amount of weight. And I recognize that the S&Ps, they just closed here at 39.24. Do not be surprised in the evening hours tonight if we actually pull back and literally start trading in and around the 39.11 handle once again. This is these are two levels that have actually held, again, quite a bit of weight. If you look at the 30-day 1 hour, again, 30-day 1 hour, and I start to really kind of drag my mouse on the screen, all right, there is actually my mouse right now on 39.11. It has been a very consistent, very central point for trade. The other level, as I just mentioned a moment ago, has been a kind of a bigger, if you will, reactionary kind of level, and that is right around the 38.80. And you'll see actually, again, in a number of cases, all right, where 38.80 has actually come into play. And those are two levels that, again, it's not the end-all be-all. I mean, I'm not going to sit here and talk about support and resistance. These are areas that the marketplace happens to be gravitating to. I'm also not I'm not going to go to the point where I'm actually going to say that these are what we would call definitive gravity points. Nevertheless, okay, keep those two levels in mind in the very, very near term because a lot of trades probably happen around them. The next thing we're actually going to look at deals with expected move. So for those of you that are kind of initiated here about expected move, this is the SPX expected move. And if you are aware, maybe unaware, the SPX, its expected move for the entire week was about $74, $74 higher or $74 lower. Clearly, in Tuesday's trade, we absolutely smashed through it. Look where we are now. I mean, we went from one extreme where we smashed through the bottom edge of the expected move. When we say smash through it, I mean, come on, the S&Ps were basically at 3,800, okay? They're now actually, 125 handles higher. And this is why I started off with, is this dip buyers or more sell-side activity? The reason I question that is because this kind of reaction back is more indicative of shorts that are actually covering, and we squeeze a little bit higher. You could get another bout of sell side activity, okay? But again, let's look, before we go any further, let's actually look at some really specific, okay, expected moves. So you see that the SPX, again, it did what it's supposed to do. It actually hit the edge of the expected move, kind of cracked through it. And by the way, if you missed Tuesday's trading session, spot on here, people. We came down to the edge of the expected move. We crossed through it, came back up, okay, pulled back to it, and took off from there. Again, just exemplary of the expected move specific to the SPX. Okay, so actually snapping back here to the SPX, now we're actually going to look at some other expected moves. One of the first things I want to show you, okay, is the QQQ. QQQ, I'm going to apply auto expected moves. So here's where we're actually going to point out, going to recognize, I know that the S&P's bounced back. The Nasdaq is actually sitting towards the lower edge of the expected move. Okay, what's wrong with the Nasdaq? Well, I'll tell you what's wrong with the Nasdaq. On a year-to-date basis, it's actually, there's many products inside of the Nasdaq that are just not faring well. Okay, so before I go on to other auto expected moves, I just want to pull up a quick point. The Nasdaq on a year-to-date basis is actually up, okay, 4.7%. How does that actually compare to the spiders? Spiders are up actually 6%. Want to see something really crazy? IWM is actually up some 17%. When you start to look those stock after stock, Microsoft is up about 7.7% on the year. You aware that Apple's actually down 3%. Facebook is actually down almost 2%. Okay, Amazon is basically flat on the year. Google is still big. Google's actually up about 20% of the year. And for the most part, Tesla, it's about a 1 to 2% move on the year. Nasdaq is actually in trouble. And it's one of the things that I wanted to point out because, again, we're talking about more sell-side activity coming. Okay, again, right now, tech is not the performing area. It's just not the performers. And yet, this is where people are heavily, heavily weighted in their portfolios. So again, if you take a look at the IWM, okay, and apply auto expected moves, the IWM yesterday was just getting crushed. It too has completely rebounded by midweek. Remember, the QQQ is towards the lower edge of the expected move. The IWM is right towards middle of the road. And here's the really wild aspects. What's holding the S&Ps up continues to be the financials. The financials have actually cracked the upper edge of the expected move. This is going to be dangerous, and this is exactly why I say, could there be more sell-side activity? Yes. Okay. Even a flinch to the downside in the financials. What I would assume is going to occur in the next 2 days of trade, all right, that we're going to get like a reverse rotation. I think we're actually going to see the financials take a little bit of a hit. Okay. At the same time, may actually come in here and buy up tech. All right. The trade has diverged simply too far. The financials are outperforming expected move time and again. All right. Then you have the QQQ, which is underperforming time and again. So I think we're actually going to get the reverse rotation. With the financials, I would anticipate that the XLE is going to come in. This is the energy sector. It has just gone downright to ridiculous levels. Breach of the expected move, breach of the expected move, breach of the expected move, breach of the expected move. Here's another breach. Okay. I mean, how many weeks in a row can the options marketplace get it wrong? And the answer is about 6, 7 in a row. Okay. I would look for the energy sector to pull back. I would look for the financials to pull back. Tech actually has a shot to rally. All right. Here's another aspect. The bonds got downright scary inside of today's trading session. But at this point in time, I think they may have actually had a bit of a reactionary low. And again, I am not a huge market technician, but at this point in time, the trader in me actually tells me, okay, that we could bid back under the bonds, which is precisely why I think we're actually going to see the counter rotation, again, out of financials, out of energy, maybe shift back to tech for the remainder of this week. With that, again, expect like Thursday and Friday, I've seen some, again, big boy ranges. Put on your big boy pants because these are some big ranges. Those ranges should diminish to some degree. as the week actually progresses. But look for this counter rotation. Look for the bonds to rally, hit the financials. Okay? It's a party, people. Say what you will about this marketplace. Doesn't matter whether the dip buyers are coming in. We got ourselves some volatility. We got ourselves a market. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.